Everyone thinks they understand the Bitcoin 4-year cycle. Halving happens, price goes up, blow off top, bear market, repeat. Simple, right? Except that model is dead wrong. And if you're using the halving as your primary timing tool right now, in this bearish environment, you might be positioned completely wrong. Because Bitcoin does not bottom at the halving. It doesn't even peak exactly on schedule. And when you overlay real cycle structure, the 60-day, the 30-week, and the true 4-year cycles, something very different happens. So today I'm going to show you where we actually are inside the real 4-year cycle, why the halving narrative misleads traders, how the 30-week cycle exposes bear market traps, and whether we are statistically closer to a macro bottom or not even there yet. And I promise you, by the end of this video, you will look at the crypto market completely different. Let's start with what everybody believes. The simplified model says accumulation, expansion, parabolic blow off top, and then bear market. Then halving, quote unquote, resets everything. But when we study Bitcoin's historical price action, not just price, but time, the structure is more complex. Because Bitcoin doesn't move in one 4-year cycle. It moves in nested cycles. 60-day cycles, 30-week cycles, and the 4-year cycles. And those smaller cycles build the larger ones. When you analyze time instead of narratives, you realize something shocking. The halving is not the center of the 4-year cycle. Is just an isolated event inside of it. So, cycles theory tells us markets move in rhythmic waves. Cycles nest inside other cycles. Smaller cycles build larger ones. In Bitcoin, the 60-day cycles form intermediate swings. The 30-week cycles form major advances and declines. Roughly 4-year cycles form macro expansions and contractions. But here's the key. Cycles have phases. They rise, they peak, they decline, and they bottom. And most traders ignore the declining half of the 4-year cycle until it's too late. So let's break down the 2016-2020 structure. The halving happened in May 2020. But did Bitcoin immediately explode? No. The true parabolic expansion didn't begin until the 30-week cycle turned bullish and began right translated. Then we had multiple 60-day cycles building momentum into 2020 and 2021. But take a look here. The 4-year peak did not occur at the halving. It occurred well after the 30-week cycles began compressing and translating left. The final top came in when the 30-week cycles became left translated. 60-day cycles started to lose amplitude and momentum divergence started to appear. The time structure shifted before price collapsed. The same thing happened again recently. And to be even more clear, the bottom of the 2016-2020 cycle actually happened at around 497 days before the halving. Now let's talk about the most recent cycle. The 2024 halving occurred during accumulation. Then we saw strong 30-week advances, multiple bullish 60-day cycles, and a massive parabolic expansion into 2025. But here's where most traders misread the structure. The January 2025 top was not the final 4-year peak. The 30-week cycle compressed, then expanded again into October 2025. So it was a double peak structure. Then we started the 2026 decline. So, do you remember any bad news during this time? The only thing we can recall is that Trump started the tariff war again against China. But we already had tariffs tantrum before, so it should not be a big deal, right? Anyways, we had the October 10th nightmare. and we have been only down from there. So why? It happened because this was a descending right translation of the 4-year cycle. Just like we had on the previous cycle, we had the descending right translation. After the price blow off top on the right side of the midpoint between the bottoms, it was just a matter of short time until the peak was formed and we started the bear market. The same thing happened again in 2025. Right after the first quarter of 2025, we were already running out of time to reach the top. So from the cycle structure, nothing unusual happened. Everything was according to the cycles. Now, here's the important question. Where are we now? Are we A, early in a new 4-year expansion, B, mid-cycle inside a corrective phase, or C, still descending in the macro composite? To answer that, we will look at the behavior of the 30-week cycle, the amplitude of the 60-day cycles, and translation characteristics. Because when a 4-year cycle turns up for real, the 30-week cycle must shift from left translation to right translation. That is non-negotiable. So, in bearish macro environments, you typically see 30-week peaks forming early, like we had right here and right here. We have weak follow-throughs after 60 days cycle lows. Mid-cycle rallies that fail around week 15 and 18, and the simple lower highs structure fulfilling the value trend line of the yearly cycle. So ask yourself, are the current 60-day lows producing explosive right translated structure, or are they producing relief bounces that stall? This is how you diagnose cycle health. Not by hope, not by headlines, and not by ETFs narratives, by time symmetry. And from what I see right here, in my opinion, this is a clear bear market structure, just like we had on the previous cycle. Now, if we project the average duration of Bitcoin's 4-year composite cycle and align it with the last confirmed bottom, we can estimate where we sit inside the structure. And here's the uncomfortable truth. The market may not be as early in a new macro expansion as many believe. Until the 30-week cycle has not fully transitioned to right translated like we had on the previous cycle, then we may still be inside the latter half of a macro distribution phase. So this means that relief rallies can happen. 60 days low can produce sharp bounces. But until the 30-week cycle confirms sustained right translation, the macro structure remains fragile. Just like we had on the previous cycle, I am expecting the price to continue to fill out the value trend line on the yearly cycle, get below the strong sweep at the bottom, in which right after that we are going to have the macro bottom confirmation, just like we had right here at the end of 2023. To guide us, we already have the strongest sweep to the downside. So I expect the price to continue bounce to the sides right here until we break the structure of the value trend line on the yearly cycle. Then perhaps by the beginning of 2027, we are going to get a sharp bottom before we continue to move higher to the next cycle. This is why bearish markets feel confusing, because smaller cycles turn bullish before larger cycles do. You get hope, you get disappointment, and then hope again. But the 4-year cycle doesn't care about sentiment. It cares about time. And historically, true macro bottoms occur when a 30-week through aligns with a strong 60-day through and late in the descending half of the 4-year cycle composite. That alignment is rare. But when it happens, that's when structure reversals occur. So here's the real question. Is the next 30-week bottom aligning with the next projected 60-day bottoms? And where does that sit inside the larger 4-year timeline? Because if those begin synchronizing, that's when the probability shifts dramatically. I want you to comment below. Do you believe we are early in a new 4-year expansion, or still inside the declining composite? Let me know your reasoning. Most traders analyze price. Very few analyze time. And in bear markets, time matters more than ever, because the market needs time to repair structure before it can expand again. If you want, in the next video, I can break down the exact projected window for the next 30-week bottom and how it interacts with the 60-day cycle. But for now, start looking at the market through time, because once you do, you will never trade Bitcoin the same way. Thanks for watching.